if I'm sending money back to my mother in Mexico as a Hispanic consumer living in the United States, mom might not be your target customer for a USDC transfer, but your brother, who's your same age, who still might live in Mexico, might understand technology a little bit better. He might be more comfortable in that world. I think the question becomes, USDC lands in his wallet, what is his ability to use that coin? And I think to the extent that they feel like they can exchange it for fiat currency, that they can load wallets with it, they can pay for goods and services with it, I think that's when it begins to change. I think until then, I think you're going to have consumers still sort of saying, hey, this is really nice, but is it really my use case?
Here we are with Alex, CEO at MoneyGram. Alex, welcome to the Defiant. It's great to have you.
Thank you. Yeah, it's awesome to be here.
Okay, so MoneyGram is super interesting in the context of crypto. Cross-border money transfer is, I think, the first obvious use case for blockchains and cryptocurrency. And that's how you're implementing crypto in your business. So I'd love to get first just some background on how this started. Like, how long ago did you start it? Just like experimenting with crypto, what did those early experiments say? And from there, how did that develop?
Sure, yeah, absolutely. Many moons ago, we actually really had our first foray into crypto with a combination of speaking with Stellar and actually at the time Ripple. We ended up moving forward with a program with Ripple where we're working not so much on the consumer side, but on the foreign exchange trading side. So we send a lot of money every day to Mexico from the United States. And so we were looking to see if we could leverage blockchain technology to make that more efficient and faster. And what we sort of found was yes and no. It wasn't really any better. It was just a little bit different. And so from there, we went to Stellar and we actually began to change the use case and focus more on consumer side. And so we actually built something really, really unique with Stellar. And we called it sort of the Stellar Access, which is sort of our service today. But what it enabled us to do is take our APIs and integrate them into blockchain APIs. And so our traditional APIs could now talk to the Stellar network and the Stellar blockchain, which is very, very unique in the market. And from there, what we tried to do was think about, okay, interoperability, right? If you're going to have sort of crypto over here and you're going to have fiat over here, you can either, sort of the early days of crypto, right, was all about replace fiat. And still in some respects, there's many people still sort of working on that angle. I think what we've seen over the years is that model has shifted a little bit, which is how do you leverage blockchain and crypto to improve the speed and the performance of things happening in the fiat world. And so when you think about remittance and what we do for a living, it's a beautiful, wonderful business where we move money from the US to Mexico every day, and we do it instantly for consumers. But the back-end processes around it and the process that you go through to do it is actually quite complicated. In addition to that, for a customer, you're really kind of forcing a foreign exchange transaction to occur at the time of the transfer, because we send dollars and you're basically committing to an FX rate and sort of a positioning of the currency. And so what we're trying to do through Stellar Access, and then actually now through the launch of our new MoneyGram wallet, which is our own non-custodial wallet, is to try to make that a more seamless experience for a customer and give them the ability to load USDC, send USDC, and then let the receiver decide when they want to convert that into local currency, if they need to convert it back to local currency. And so what we've done and that's sort of the direct rail flow, what we've done with a lot of partners, we're up to 19 wallets now on the Stellar network that are actually interoperably doing whatever business they're doing with their wallet, and then creating the opportunity to cash out into the MoneyGram network or cash in through the MoneyGram network. And so that's really giving some different use cases and permutations around what consumers are able to do with crypto, and then also in many respects how they can think differently about fiat.
Super interesting. I just wanted to double click on something you mentioned earlier. Why that difference between crypto being better for retail than for business?
Yeah, I think that the challenge becomes the stable translation. What I found working with general cryptos, non-stablecoin, is that you're creating the same complication in a foreign exchange trade that you do in a regular world of fiat. So if I go from a US dollar to Bitcoin and Bitcoin to a Mexican peso, or in the case of Ripple, we went from a dollar to XRP, XRP to Mexican peso. The volatility and the changing rate around XRP or Bitcoin and sort of the way it's moving throughout the day is really very similar to how US dollar to Mexican peso is actually changing on a daily basis. When you take a dollar and match it to a dollar and then you transfer a dollar, you've really stabilized that out and you've changed that dynamic quite a bit. So what happens, I think, in when we try to scale for consumers is that they're much more sensitive to the FX rate than on the business side. The business side, you can implement and have more volatility because the payment dollar flows are usually quite large, and that can create some efficiencies and some inefficiencies. That's where I was saying earlier is that Ripple worked. It just doesn't necessarily. It was a different process, and in some cases it was easier, and in some cases it became a little bit more cumbersome than just generally buying and selling, FX through a normal channel.
Okay.
So,
okay. So the thing that didn't work as well was having crypto be the
facilitator, of the conversion,
and not a stablecoin. So
Correct.
now you're doing all transfers via USDC.
But that's what we're implementing now. Yeah. So we still have our old traditional system that we use, which works really well, and now we're supplementing that with the ability to seamlessly move through crypto through the stablecoin, but also then interoperate that stablecoin back to your fiat currency if that's what you need.
Right now, how much volume are you doing in crypto, and what percentage is that of your total
It's relatively
business?
small still. I think I was asked earlier. We like to talk sort of back in 2011. About 2% of our business was digital, and today, north of 50% of all of our send transactions are digital, and money that we send is received now digitally, about 35% of our business. So that transformation's really occurred over the last decade and a few years. So today where we are with crypto is it's kind of back, it's sort of that digital, it's like 2% of what we do, but we think through what we're moving with, what we're doing with Stellar and how we can open up those rails is that it can become much larger as we go forward.
Is the key change the use of stablecoin?
I think it's one of the key changes is definitely stablecoin. The other thing that has to change and will take and continue to take some time is also regulatory speaking. Not everywhere in the world is it really allowed yet to sort of use crypto and stablecoin. There's still a lot of government regulation that needs to change, and we actually have some system limitations as well. So we'll have partners that are on a version of MoneyGram that doesn't have the ability to do the cash-in service, for example. Or we have to do new trainings with the tellers because they don't understand the difference between a traditional MoneyGram transfer and a crypto transfer. So there's some education that needs to happen. There's some system changes and upgrades and technologies, and then there's regulatory side of it. So there's always something to do.
But you see a trend that's similar to a transition into digital where 2% became 30% in about a decade. You see the same thing happening with crypto?
I think it can, yeah. I think it can. I think the question that's open is, and I think what we all believe is that the remittance use case is a great use case. We're going to find out if it is or it isn't, and that's kind of what we're pushing for. I think consumers definitely are looking for speed. They're looking for security. And they're looking for, really, how do they save money? How do they get it there efficiently and affordably? So I think there is a tremendous amount of value that can be created by leveraging blockchain and stablecoin. I think the question becomes, does a consumer feel like they understand it? Do they feel like when they've received USDC, do they know what to do with it? Do they like the interoperability back into the fiat world when they need it? Is that really moving along in the way that they want it to? And I think what we're going to start seeing very soon are more fiat type rails. A good example would be Gcash in the Philippines, right? So Gcash in the Philippines is one of the largest wallets, and it's fiat, and many consumers used it domestically. Now they use it to send and receive money, and then when the money's in, they can actually pay for things at the point of sale. When someone like a Gcash says, "Oh yeah, we'll accept the USDC," and there's a conversion rate into Filipino peso, that's going to, I think, help use cases expand into the markets as well, right? So there's a little bit of a utilization in market that I think is going to help kind of transition it, because a lot of what you see in crypto and blockchain technology today kind of stays in the crypto space, right? And so I think for something like a remittance, where it's so important that people get money back home, that they need to think about how do they seamlessly interoperate with it. We're doing some interesting things on aid relief with UNHCR, where through our Stellar partnership, you can actually, we've been sending money, instead of making it a cash pickup, we've actually loaded stablecoin into wallets so that consumers can access that money. So as those types of things become more prevalent, I think it makes the use case that we're trying to drive more prevalent. But we think our interoperability is helping to sort of set that transformation.
Okay, so to you, it's not enough to have like a more efficient infrastructure and make transfer cheaper. Do you think that for that change to really happen, people need to be able to use crypto in their everyday lives, like for payments?
I think it needs to be simple. I do. I think if you're if I'm sending money back to my mother in Mexico as a Hispanic consumer living in the United States, mom might not be your target customer for a USDC transfer, but your brother, who's your same age, who still might live in Mexico, might understand technology a little bit better. He might be more comfortable in that world. I think the question becomes, USDC lands in his wallet, what is his ability to use that coin? And I think to the extent that they feel like they can exchange it for fiat currency, that they can load wallets with it, they can pay for goods and services with it, I think that's when it begins to change. I think until then, I think you're going to have consumers still sort of saying, hey, this is really nice, but is it really my use case?
Do you think there's demand for DeFi applications there, like being able to earn yield on USDC, or?
I think so. It gets complicated because of the different markets that you operate in. And so again, regulatory standards and sort of banking standards are there. But I think the more that you begin to see tokenization, the more you begin to see smart contracts, I think then DeFi comes into play. That also helps change use cases, and the reason that people, if you're looking at a smart contract, can you pay for the smart contract? Can you facilitate funds flows using stablecoin and other types of crypto to actually fund transactions and sort of do the payment side of it? I think as those become more efficient as well, I think it all just begins to sort of layer on top of each other. But when you think about the complexities of a traditional financial system, replicating that or replacing parts of it with new technology, it just takes time. I think it's always there for the opportunity, but it takes time before people begin to think of it more mainstream.
For sure, I think like the UX is just starting to get there, right? Like being able to do beta transactions and not pay gas with like the native blockchain currency, and not having to confirm every transaction. I think that's like just starting to happen, but it's still super early.
It is. It's really super early. And the other thing too is that you don't really have a lot of great communication between blockchains right now. You don't really have a lot of great interoperability between coins, which is why stable coins are so important. But even stable coins have different views of value, and people think about them very differently. And even having a USDC coin versus a euro coin, moving between the two has some exchange associated with it, right? So there are these other complexities that are going to come into play, and so I think there is sort of this interesting world that has to develop where you've got sort of pure crypto native, you've got pure fiat, and then there's this sort of hybrid world that's beginning to form, and I think it's just early.
So why Stellar for you?
For us, they've just been an amazing partner who has a lot of thought about innovation, and a lot of focus on the UX and the customer side of it. I think that they've always had a large focus in their foundation around how do they empower the world and make it stronger and a better place. And I think that vision, flows into their remittance use case. One of the things that we've never done with Stellar is really anything related to, the Stellar Lumen, right? What they do with Lumens and how they sort of operate their business is always sort of an independent. So what we've tried to do is leverage the blockchain. We've leveraged the interoperability. And then we've recognized early on having a partner like Circle that can come in that can help us do the stablecoin side of it is actually like one of the more important features of kind of that relationship, because you're trying to create a bridge. But the only way to create a bridge is if you can have a stable token in between. And so I think Stellar's just always been extremely flexible on that. And I think they've got a great group of developers and a really strong vision around how foundationally you can shift and change the world, if you will. And that's been a great way for us to kind of partner and think about how do we expand and change our customers' experience through remittance.
Nice. And then you mentioned your non-custodial wallet. How does that fit into kind of your strategy and like your customer who you said like might not be the exact user for USDC, and a non-custodial wallet is even more kind of crypto native. So how does that fit in?
Yeah, well, the way it's going to fit in, or at least we think, is that this is going to be the first time where a money transfer company has taken the steps to directly inform its customers. So we're going to tell all of our MoneyGram customers that if you're sending to Mexico, you can send the traditional way, or now you can use this new methodology. And so it's really going to be an attempt on our part to try to see how our consumers that we have literally millions of every day begin to think differently about interactivity with us, and we're going to learn a lot from that. And I think that's where it becomes important. And when you're partnering with third-party wallets, it's a wonderful. We've had great relationships with all of them, and we'll continue to do that. But what that wallet exists for is a little bit different, and every wallet is a little different. And why consumers are on that wallet is for various different reasons, whether that's Vibrant or whether that's Lobster or sort of one of our other larger partners. For us to have MoneyGram wallet, then that focus can be simply on, send money, save money, and it sort of, in one hand, kind of disrupts what we do. On the other hand, it's putting the power of that straight into the control of our customers. And so we'll find out really quickly if they're interested or not interested, or what that demographic looks like and what their use case is and why they're interested in that. So it's going to be a lot of fun. Interested
to learn a bit more on how that disrupts. You said it disrupts what you do, like in what way?
Well, today, we typically, again, using the U.S. to Mexico example, we send money from the U.S. to Mexico. But that's because a consumer has, come to, a MoneyGram location, or they've gone to MoneyGram.com and they say, hey, I need to send $350, dollars to Mexico. That's sort of our traditional model, and that basically says, tell me who you're sending to. Here's the foreign exchange rate today. Here's the cost of that service, and then we send it, and the pesos are available. This is going to say, send $350, don't do the conversion, take the $350, send it to Mexico for free, allow your consumer on the receive side to sign up for the wallet, take the $350 of USDC, and then let them decide what to do with it. So and we haven't charged any money yet for the cross-border side of it. So when someone wants to then spend the money in Mexico or convert it to cash, then that's where the fee will come into play.
Oh, I see.
Which is a very different way of sort of thinking about cross-border sending from the way it works today. So that's why it will be disruptive and different.
Interesting that you chose to place a fee in the kind of cash out in that part of the process. So I guess to incentivize those transfers, but then you risk, what if people like don't know how to?
No, we'll change it. We'll change it. We're gonna learn.
Right.
Yeah, we're gonna learn. Yeah.
Super interesting.
Yeah.
Great. Cool. And then kind of looking forward for what's next with MoneyGram and crypto. Like, what are kind of things you're most excited about, the next milestones you're working towards?
Yeah, we have a lot of markets that we want to expand to. We just started our wallet in 3 countries, MoneyGram Access. Today you can cash out in 170, but you can only load in 36. So we're looking at expanding those rails as well. We have interoperability between our current MoneyGram.com app and the MoneyGram wallet app, where we want to make that a little bit more seamless so that you can sort of see balances both directions. And one of the things that we've done on the MoneyGram wallet is if you already have a MoneyGram.com account, you can actually open a MoneyGram wallet using those same credentials. So we want to create interoperability back and forth. And then we've also just recently launched in the United States what we call MoneyGram Account, which is effectively the ability to have a traditional bank account and debit card through MoneyGram. And then, which is really unique. So we've got a big push there to sort of get consumers to use that. And so now I'm trying to get them to sort of cross-pollinate, as it were, and sort of work between the 2 services. So we've got a lot on the plate. Yeah.
Awesome. Well, thanks so much for sharing it with me.
Yeah, of course. Thank you for having me.
Interesting.
Wonderful to be here. Thank you.